going to dive deeper in the sea of knowledge of accounting. So for today, we're going to talk about statement of cash flow. Cash flow, a useful addition to financial statement because it is recognized that the accounting profit is not the only indicator of company's performance. It is important just like any other statement in an accounting cycle because it enables us to identify all transactions that is related to cash. Cash flow analysis is often used to analyze the liquidity position of a company. When we say liquidity, it is the cash asset of a certain company or any other asset that can be converted easily to cash. It gives a snapshot of the amount of cash coming into the business from where and the amount flowing out. So there are two categories, cash in and cash out. When we say cash in, it is when we receive sales when we are rendering services. And when we are saying cash outflow, it is when we spend money for our expenses. So the aim of statement of cash flow is to provide information to the users of financial statement about the entity's ability to generate cash and cash equivalents, as well as indicating the cash needs of the entity. So it involves all transactions that is happening in the business as long as it has cash on it. So the statement of cash flow provides historical information about cash and cash equivalents, where it came from or where we spend it for. And we classify it in three categories: the operating activities, investing activities, and financing activities. The benefits that cash flow gives us, but there are three main benefits that cash flow gives us or provide information for us. So users gain further appreciation of the change of net asset of the entity's financial position, liquidity, and solvency. So using cash flow, we will be able to know how liquid our company is, or if does it generate enough profit for us, or do we spend a lot of money for our expenses or not. So it enhances comparability as they are not affected by differing accounting policies used in the same type of transaction or events. So unlike any other statement that involves other assets or other informations, so cash flow focuses only on cash, and it enables us to see how many or how much sale did we receive from rendering our service or by selling our goods. It can also be used as indicator of the amount, timing, and certainty of future cash flow. Statement of cash flow. IAS 7 requires statement of cash flow during the period classified by three categories: operating, investing, and financing activities that we are going to talk about today. When we say operating activities, it is the key part of cash flow because it shows whether or to what extent company can generate cash from their operation. When we say operating activities, it involves all transactions that we are doing daily in our company. So most of the components of cash flow from operating activities will be those items which determine the net profit or net loss of the entity, related to the main revenue producing activities of the entity. For example, when we spend money for our expenses such as utilities expense, and when we receive cash from our sales is one of the examples of operating activities. So here are more examples for further understanding. Example, cash received from the sale of goods and rendering services. Cash received from royalty fees, commission, and other revenue. Cash payment to suppliers for goods and services, and cash payment on the behalf of the employee. So all expenses such as salaries expense, utilities expense, and other expenses that we do daily in our company will belong to operating activities. Next category is investing activities. The cash flow classified under this heading shows the extent of new investment in asset which will generate future profit and cash flow. So it involves all the investment that we put in a company. For example, we buy a service vehicle for future use, so it can be considered as one of the asset, and the cash that we paid for that vehicle will be under the investing activity. For example, cash payment to acquire PPE, intangible and non-current asset, including those relating to capitalized development cost and self-constructed PPE. cash received from sale of PPE, intangible, and other non-current asset. For example, we decide to sell our vehicle, so that money that we gain from selling that vehicle will be added on investing activities. Cash payment to acquire shares or debenture of other entity, as well as cash received from sales of share or debenture of other entities. So when we plan to sell one of our stock in our company or shares or bonds, that money that we gain will be added in investing activities. Cash advances and loans made to other parties, and cash received from the repayment of advances and loans that made to other parties. The last category is financing activities. This section shows that the share of cash which the entity's capital provide have claimed during the period. This is an indicator of likely future interest and dividends payment. For example, cash proceed from issuing shares. Cash payment to the owners to acquire or redeem the entity's share. Cash proceed from issuing debentures, loans, notes, bonds, mortgage, and other short or long-term borrowings. And principal repayment of amount borrowed under leases, interest paid will be shown under operating activities. So financing activities in the cash flow statement focuses on how a firm raises its capital and paybacks its investors through capital markets. So these activities also includes paying cash dividends, adding or changing the loans, or issuing and selling more stock. The total of these three categories will result to either net increase or net decrease in cash. So there are two methods in reporting cash flow from operating activities. Number one is direct method and number two is indirect method. When we say direct method, it is the disclose of major classes of gross cash receipt and gross cash payment. The cash flow statement presented using the direct method is easy to read because the list of all the major operating cash receipt and payments during the period by source. In other words, it lists where the cash inflow came from and where the cash outflow went. Cash flow direct method determines the changes in cash receipt and payment which are reported in cash flow from operations section. The direct method for the statement of cash flow provides more detail about the operating cash flow account, although it's time consuming, but it gives us more information than to the indirect method. Direct method is also known as income statement method. Both of indirect and direct method are mostly the same except from operating activities. They only differ at operating activities because indirect method it is more detailed as compared to indirect method. The format seen in the screen is an example of direct method. So the format, here is the list of the most common types of receipt and payment used in direct method format. Receipt received from cash customers, payment paid by suppliers, payment paid to employees, interest payment, and income tax payment. Involves all the cash that we receive from sale and the cash that we spend for our expenses. On the other hand, under the direct method, the only section of statement of cash flow that will differ is on the operating section. The direct method lists the cash receipt and cash payment made during the accounting period. The cash outflows are subtracted from the cash inflows to calculate the net cash from operating activities. Before the net cash from investing and financing activities are included to get the net cash increase or decrease in the companies for the time period. The disadvantage of the direct method is it takes a lot of time to make, but the advantage of it is give us more information unlike in the indirect method. So now we're going to talk about indirect method. What is an indirect method? In indirect method, net profit and net loss is adjusted for the effect of transaction of the non-cash nature. Any deferrals or accruals of past or future operating cash receipt or payments and items of income or expense associated with investing or financing cash flows. The statement of cash flow prepared using indirect method adjusts net income for the changes in balance sheet accounts to calculate the cash from operating activities. In other words, it changes in asset liability accounts that affect the cash balances throughout the year are added or subtracted from net income at the end of the period to arrive to operating cash flow. Indirect method, the indirect operating activities section always starts out with the net income for the period followed by non-cash expenses, gains or losses that need to be added back or subtracted from the net income. The non-current activities typically include depreciation expense, amortization expenses, depletion expense, gain or loss from sales of asset, losses from account receivable. The indirect method for calculating cash flow from operation uses accrual accounting information, and it always begins with the net income from the net income statement. The net income is then adjusted for changes in the assets and liabilities account of the balance sheet by adding or subtracting from the net income to derive the cash flow operation. An important note you should learn. The cash flow statement's direct method takes actual cash inflows and outflows to determine the changes in cash over the period time. So unlike in direct method, we are including all non-cash asset of a company such as depreciation expenses. So in direct method, we only involve all transactions that has cash. Important note, the cash flow statement's direct method takes the actual cash inflows and outflows to determine the change in cash over the period of time. So unlike in indirect method, we are including non-cash assets in our cash flows, such as depreciation expenses. On the other hand, when we are using direct method, we only record all transactions that has cash on it. So that's all for today, everyone. I hope you learned something. Thank you for listening, and God bless you always.
Summer after high school when we first met, we'd make out in my Mustang to Radiohead. And on your 18th birthday we got matching tattoos. I used to steal your parents' liquor and climb to the roof, talk about our future like we had a clue, never planning one day I'd be losing you. In another life, you would be my girl. We'd keep all our promises, be us against the world.